Hi, and welcome back to the WHVP podcast. In this episode of the podcast, the WHVP team sits down and discusses socially responsible investing. We will cover the definition of what social responsible investing means, some of the benefits of social responsible investing, and some of the challenges that it presents. Before we get into that, the team discusses some news in the Swiss sporting world at the international level and how we're connected to that at WHVP. A heads up warning for this podcast episode. It's been done over Zoom as Jamie and Urs are currently traveling. The audio quality might be a little bit poorer than the last couple episodes, but if this doesn't bug you, stay tuned. Now let's get into it. So yeah, we're back here with the WHVP podcast. I'm joined with Jamie Freihoff de Rose and Urs Freihoff de Rose. Today we're going to be talking about socially responsible investments. But before we get into that, we're going to talk a little bit about some Swiss news that happened over the weekend. So what I heard is that the Swiss national team has now again qualified for the World Cup, the soccer team for our American listeners. Did you guys read that as well?
Honestly, I heard it from Switzerland itself. So from a friend in Switzerland, he told me that Switzerland qualified because as of now, Jamie and we are here in beautiful Costa Rica, working remote, so I didn't get too much from what was going on in Switzerland at this time. But yeah, that's beautiful news, especially, I mean, this summer we already had great results with the Olympia in Tokyo, and now we qualified ourselves to the World Championship next year in Qatar.
Yeah, how does it make you feel as Swiss people?
It's so great to be part of an international sporting competition. It's especially fun if you have like your own country being part of it, because those competitions are always in summer. So we usually have those outdoor gatherings and the barbecues, and we can watch the games together with friends. And it's always a lot of fun. So I'm very excited that we qualified again. And I think it's quite a big feat for such a small country as ours. So yeah, that's very exciting.
Yeah, I love going to the outdoor barbecues and the events with the huge screens and everyone's outside. It's a very cool experience to go to and be a part of, for sure.
Yeah, but talking about international sporting competition, I think you have some exciting, more personal news to share in that front as well, right, Jess?
Yeah, actually, so in international sports news, I had the fortunate case of being selected for the Swiss national rugby team, and we had our first international test match against Lithuania this last weekend, and we have our next international test match against Poland this coming weekend. So for me as an American, it's very much an honor to be playing for Switzerland and making an international debut. The level of competition at there is very high, and so it's a lot of fun. It's really exciting. So I'm very honored to be living in Switzerland, and even more honored to be representing now the Swiss people and carrying that responsibility on my shoulders. It's a lot of fun and a lot of emotional highs and lows, but yeah, so.
Yeah, we can imagine. And we're already very much looking forward to watching your games as soon as we're back in Switzerland, a bit of a more stable internet connection.
Yeah, that's good. Yeah, cool. So yeah, let's just jump in. Do you want to quickly go over our or your two plans to be in the States quickly, and then we'll jump into our topic?
Yes, absolutely. So the reason why we're in Costa Rica is because we booked this trip before the travel restrictions were lifted. So we wanted to be able to go to the US before Biden changed the rules, and we wanted to make sure that they are going to let us in. So we were going to stay outside of the European Union for more than 2 weeks, or respectively outside of Europe for more than 2 weeks. And this is what we're now doing here in Costa Rica, which is also why we have the the different backgrounds. And then on Saturday, we're flying into Miami. We're very excited to be meeting with clients and prospects and also some business partners. It has been a while since we have last been there. And then we're just going to stay there for a while. I'm only going to be there for a day, unfortunately. He will then move on to LA, and I will go to Chicago and New York, and then we'll be flying back to Zurich. But we already have some plans for next year as well, now that international travel is made a bit easier again. In January, I will be in Orlando for a week, I believe, in the beginning of or middle of January. And then at the beginning of February, I will be in Las Vegas and Phoenix. So again, if anyone would like to meet up, have a personal meeting, be it prospects or clients, or even potential business partners, just let us know. Send us an email to info@whvp.ch, and we're very happy to try to arrange something.
Yeah, awesome. Thank you for that update. And I know we as a company are really excited that you guys are going to be in the States and get into be in the US and meet with clients and potential clients. That's really, really cool. So now we're going to jump into our topic for today, which is socially responsible investments and what those mean. Kind of just give a general overview of, sometimes there's a bit of confusion between socially responsible investments and ESG investments, which is environmental, social, and governance investments. And so we're going to talk more on the socially responsible investments first. So I'll quickly give a quick breakdown of what that is and what they are, and just a little bit of the history, because that's quite an interesting history. So socially responsible investments tend to look at investing into companies based off of the social culture of the time, of what is important to society, what's important in the culture of how to move the world forward. So currently, right now, that's could look at investing or not investing in companies that, for instance, produce tobacco or are involved in producing weapons. Or even, it looks at companies who are being environmentally friendly and how they actually produce or sell products and how those affect kind of the world that they're around. It's interesting because there's two pieces to socially responsible investing. Is one is looking at the company, and the two is looking at the profits. And so it's always that balance of what is the company doing socially. Are they being responsible to the world that they're around, and do they have profits? And there's kind of two tacks that people take or investors take when they look at this. Is one is, okay, we want to find profitable investments that do a decent job at supporting the society, or they're responsible to their society that they're involved with. The other side is investors who really go hard out for social investments where they don't care about profit returns or not. And that's more of the conscious, the socially conscious investor. This is something that's quite interesting, that's getting a lot of traction now when we see in the markets. And its roots started in about the 1960s with Martin Luther King Jr. as he really pushed back on companies that were involved in the Vietnam War and different things. And there was kind of this big movement of the population and how they saw society and what social issues were. And they looked at companies and said, okay, how are you supporting these causes that we as society find good, or are you doing something totally against that? So that's kind of the history of where it started from. And the risk in SRI investments is the measurement of it is kind of what's popular in politics, what's popular in culture. And so you might be for one moment in an investment and the broad pop culture holds a value, and then in 10 years they don't hold that value anymore, and now it's been replaced by another value. And so there's a little bit of, I guess, of changing values of what's in society that affects kind of socially responsible investing, because it really kind of goes off of where pop culture is at. versus ESG, which really looks at, okay, how is the company run? What do they do inside their company? How do they build themselves up? And social responsible investing really just looks at what do they do in their products and how they produce their products or deliver their services and how that affects the society around them. So maybe now we could talk about possibly some like pros and cons, or the benefits of that.
Yeah, absolutely. I will let Urs cover that right in a minute. I just wanted to quickly add something to the overview, something that, or how I try to distinguish it. And that's that with ESG, the goal is not to have, or not to do any damage to society or any causes. And with SRI, the idea is more to proactively do good. So preventing bad things to happen versus actively doing good things. And I think another aspect that also helps people distinguish is that SRI almost moves a little bit into the direction of philanthropy, where the impact of the investment is weighted more heavily than the return. Whereas with ESG, the end goal is still a high return, but just with some limitations on like moral or ethical considerations.
Right. Very good.
Yes, regarding the good or the pros when it comes to socially responsible investments, it is really about how do you feel about investing. It is a process where you ask yourself, what are my my morals, what are my principles, and then regarding to the outcome, looking out for companies that are in line with how you think, with how you feel about what is good in the world. And I think it can be very helpful because it prevents you from being surprised of stuff that might come out with other firms that do kind of evil, but it's a very intense process, and it must be clear to everyone that going through all these steps and asking yourself what do you want to invest in, it's almost impossible to cover every angle of a company, and there might always be something going on which isn't public yet, but which comes out at some point of time. And it can also be positive when it comes to performance, not only negative. We have seen that with ESG investments in the last 2-3 years, because if there is a trend coming up for some kind of moral standards where a lot of investors think the same way, there might be a lot of money flowing into this company or into this industry. And if you're already in there because of your own principles, it can pick up on a performance matter and give you positive returns.
Yeah, I think Urs that has given quite a good overview, and also already touching upon some of the challenges that come with SRI investing. I think that the biggest disadvantage or the biggest challenge when it comes to kind of investing is really the time it consumes, because if you want to go into a thorough due diligence, you really will have to spend a lot of time. And a lot of people either don't have the knowledge or don't have the time to go into such deep research. And then, of course, you can outsource it. There are asset managers who are specialized in that. But then, as a logical consequence, those are usually more expensive than a regular asset manager because they also have to spend more time on research. And then, of course, also, if you're outsourcing it, you have to be very particular about your values and the kind of asset manager that you choose, because those standards and I would say like ethical considerations can be very subjective on where you place emphasis and where you don't. And then the other aspect is also something that Urs has already briefly mentioned, is with publicly traded companies. They're so huge and they have so many suppliers and producers that it is virtually impossible to control every single aspect of the supply chain. So if you really want to be 100% on the socially responsible investing line, in my opinion, you almost have to, as a consequence, only invest in smaller companies. And as I would say, like regular investor, you probably don't have the kind of money that for example, a venture capital or a private equity firm has to go into the smaller companies and really build them up. So if you have, for example, an investment portfolio of, I don't know, 10,000 or 100,000 or even $1 million, that will not be enough to go into those non-traded companies. Unless, of course, you find the fund or something. But then again, we come back to the challenges that I've mentioned before. And then the other aspect, which I find extremely interesting, and that could be a huge discussion on itself, is about the opportunity cost and whether or not it does make sense to just invest your money regularly and make a large profit and then use this profit for philanthropy or direct giving into causes that you care about. So instead of doing socially responsible investing, you could just do regular investing and then use the profit to be more specific about the kind of causes that you support. And I think that's something that can be worth a consideration as well. And then, yes, while it is true that there's money to be made in those kind of investments, it very much limits your the possibilities that you have of companies that you can hold in your portfolio, and that makes diversification more challenging. And regular viewers and listeners of ours will know that diversification is one of our top priorities, and it's just very challenging to put together a truly diversified portfolio into different countries and industries and companies where all of them are actually qualified as an investment on the SRI metric. So for me personally, maybe a bit of a conclusion, I think it can be a worthwhile cost depending on how much money and time you're willing to spend. And I think for us as WHVP, I mean, we have always had some moral restrictions. So we have never been into, for example, weapons company. We have never done anything in alcohol or tobacco. So I do think we see the point and the value of having some moral limitations. But I think it really, investors need to spend a lot of time thinking about whether or not SRI is actually worth it for them, or if there are not other more efficient ways of giving towards causes that are worthwhile. Because while I'm a bit torn about SRI, I very much believe in the power of giving back and the responsibility that people have towards their communities and causes that they believe in. And I do believe if people have a sizable portfolio and they feel strongly about certain causes, that it is absolutely right and beautiful if they give back to those. I'm just not sure if SRI is the way to go on that.
Yeah. Go ahead, Urs.
Yeah, I totally agree on this, because as I mentioned before, all the time that it consumes and all the effort that it takes to go and do this kind of investments, with including all the insecurity about whether there is a return or not. I mean, at the end of the day, if you're going to the markets, if you're going to invest your money, you want a return also on the financial side, not just on like the moral side. So I totally agree to be maybe less restrictive when it comes to the investments and the investment horizon. But then if you have some kind of a return, that you use part of this money to do good in a specific area you want to support.
Yeah, I think that's something that when I look at SRI investing, I think it provides a really good starting point to ask for the individual to ask themselves, what do I hold as values of where I want my money to be? And I think there is big value in that. And at the same time, as Jamie mentioned, if you have a list of 700 companies that you can't be involved with at all, even the chances are of if you go to a smaller company and you do have that capital to invest in those small companies, they might be working with those companies. And so it's, it's always this battle of, okay, what do I have as a value? What do I feel wildly strong about? And I don't want this in this company. It's a good thing to have. At the same time, it if you do it totally over the top, you won't be invested anywhere that you can really find. I mean, a case of this is if we look at the manufacturers of cell phones, that almost everyone I know has a cell phone. And there's not a single cell phone that is not somehow related to things that might cause concerns ethically when going into investing. There's one phone in Europe, the Fairphone, that's an ethically sourced product, but it's still using recycled phones from other companies. And so even when you go into these companies, you get into the detail of how things happen, you can still see that there's always these roadblocks that we're facing. And that's the challenge of doing business in general. And then investing is something that's also a bit difficult.
Yeah, and the other point, and I mean, I understand that opinions differ on that, but the question is also how much change are you actually going to accomplish? And I don't want to be too disillusioned, because I think it's beautiful if people care deeply about things, and if they vote with their wallet, so to speak. But at the end of the day, if you say, like, I'm not going to invest into Nestle because there are some, I don't know, human rights concerns there, I don't think you're actually going to hurt Nestle. So that's the other thing where I believe you have more leverage in other areas of your life. Because also, like, buying a stock, at the end of the day, you're giving money to the seller and not like the company itself. I mean, so yeah, I think that's something that also needs to be considered, that you also have to pick your battles on where you feel that you can make most impact. And with the large companies, the companies that are usually in the media with concerns over various moral issues, they are so huge that a handful of investors are not going to make a difference. Of course, that can be said about anything, and someone has to start. And I do believe that consumers and at the end of the day, also investors can make a change. But I think it's also worth having a consideration of how much hassle this particular fight is worth for you.
Yeah, I think that's very good. Do either of you have anything else?
I don't. I really think it's, from my perspective, it's important to let people know what are the possibilities, what can you achieve and what you can, and what are things you should things that you should think about if you go into a specific direction. But also, as a conclusion, as Jamie already mentioned, I think there are areas in your life which might be more worth to direct your money into this specific area than just thinking that with buying a green company instead of Nestle makes you a better person.
Thanks again for joining us on the WHVP podcast. If you have any comments about the episode we just had, if you agree or disagree, or have questions, or just want to discuss with us, feel free to reach out to us. And you can reach out to us by going to our website at whvp.ch and going to our contact link and sending us an email. If you want to learn more about WHVP, feel free to go and check us out on any of our social media handles on Facebook, LinkedIn, Instagram, or YouTube. If you wish to learn more about WHVP, go to our website at whvp.ch. Have a great rest of your day.